Hello traders, hello Jean, thank you so much for having me. This is Ala Peters, I'm a founder of Alpha Wave Trader Method. In this webinar, I will be sharing with you what Alpha Wave Trader Method all about, and always the most exciting part of webinar, me answering your questions. So please think about the instrument and time frame of your choice. And after my presentation, which will be probably about 20 to 30 minutes max, I look forward to answering your questions. I highly encourage you always and forever remember risks involved in trading and review US government required disclaimers. Never, ever, ever, ever trade with risks you cannot afford. Always be very prudent in trading decisions. What is Alpha Wave Trader Method and how in the world did I decide to develop it? Originally I'm from Russia and I came here in 1989, always dreaming of financial markets. I started reading Investor Business Daily, Wall Street Journal when I could hardly speak English in 1989. I had extremely lucky streak for extremely long time in bullish markets with stocks, position investing, position trading based on fundamentals and PE ratios, as well as investing in real estate. Technicals never really meant anything to me. Fundamentals is the only thing that matters. Great company, great earnings, invest in that company. 2008 changed everything. 2008 market was crashing and I remained in my very powerful fundamentally sound stocks that somehow were collapsing completely. In 2008 I started questioning everything about stock market and how could so fundamentally sound stocks collapse completely. What was possibly causing that? Was there is more to the story than just fundamentals? And that's when I went to work and started spending time with charts, studying price patterns. And I recognized very clearly that everything preset in price far in advance. And if you just spend time with price as much as I did, you will start seeing that price keeps repeating the same patterns time and time again, and that price will always override any fundamentals. Most powerful sequence ever when fundamentals, price and Fibonacci are on the same page. But if price contradicts the fundamentals, it will always override it. Here's my post on my blog, social media, LinkedIn, everywhere. Prior to Aapl earnings, what I was expecting on Aapl. You can browse my blog and you can take a look what I expecting on Aapl yesterday. This is where Aapl was yesterday on daily chart at reversal zone. I projected that it was not a time to buy Aapl, that no matter what the earnings are, which as a matter of fact I still have no idea what they were, Aapl is heading to here. This is where will be a place you would monitor to buy, but only if rules are met. Aapl respected the end of the minor trend and bounced from this level, but somehow remained stuck at reversal zone. This is Aapl daily chart. Aapl daily chart has exact same formula as Aapl monthly. If you knew Alpha Wave Trader Method in 2013, you would be long Aapl and you would be getting out of your stock when price came to reversal zone. This is not the place to remain long. This is where you monitor for reversal. but formula remains the same. It doesn't matter if you invest in Aapl and stay in Aapl for years, or you trade daily chart as number of option traders trading alpha wave trader method do. Take a look at what happened today at FOMC. I recorded the video. The video will be posted on my blog and social media. This morning, I said, let's get the heck out of here. There's absolutely nothing exciting happening here. S&P in bearish correction. Who wants to babysit that? This is not the time or place to buy S&P. Unless S&P will stage very powerful collapse, I have no interest in acquiring a position. S&P collapsed 16 points in a matter of minutes. What did we do? We took a long from here for 10 points. Exact same dance S&P hourly, as shockingly enough Aapl had done yesterday after the earnings release, respecting the end of the minor trend. Picture perfect dance. Price patterns remain firmly the same. It doesn't matter if it's daily chart, it doesn't matter if it's hourly chart, which is our guiding light for day trading. This video will be posted on YouTube channel and blog tomorrow morning. If you watched FOMC, it was one of the most volatile FOMCs on record and will remain so, as at any month and any time rates will be raised, just not yet. And this is where we are on S&P today. And this is exactly what happened on Aapl. And this is what I kept studying in 2008. Price patterns and structure. And this is what remains the core to alpha wave trader method. Price for entry and Fibonacci for exits. It doesn't matter what you trade. If you trade stocks monthly, if you trade Forex yearly, if you trade hourly chart, formula firmly remains the same. No software, no indicators of any kind. None whatsoever. Only price for entry and Fibonacci for exits. If I will bring up to you the price, you would not have a clue what this is. If this is silver hourly chart, if this is gold monthly, or is this S&P? Very strange chart, which is one of my favorite charts of all times, as I only believe in Fibonacci numbers. 21-minute chart is one of the most powerful charts and one of the most favorite charts in the alpha wave trader community. And I will show you time and time again. If you understand how price moves, you will understand and identify exact same rules and exact same pattern on any time frame and any instrument. I worked with number of programmers on indicators years ago, and I recognized that every indicator I ever came across is delayed. That every single indicator imitates what price did after the fact. That the most powerful tool ever, price and Fibonacci, that's showing you levels far in advance. One of the most favorite indicators, my last indicators that I used, was moving average crossover. Moving average crossover is absolutely fabulous, fantastic and flawless 20% of the time, because only 20% of the time we have trending markets. Moving average crossover would have never told you this morning to walk away and to take 3-hour break, which we had done when S&P was dancing in correction between reversal zone and decision point 2. No reason to babysit this. In trading world, you become hunter, you become fisherman, or you become babysitter of corrections. And only your knowledge of the market structure will tell you that. Using moving average crossover during corrective time will not produce any results. And moving averages will never show you that by the time you enter long, you're supposed to take short when price in correction in very narrow range. And the best thing you can do, walk away from computer. And don't babysit corrections. And that's the most crucial and the most essential part of trading. Knowing when not to trade, knowing when to enter the position. I work with a number of traders. Currently I work with a trader who never placed a trade in his life. And I work with traders who've been trading for 20 plus years. When I work in mentoring session, I log into mentee's computer and I try to identify what the trader had done prior to coming to Alpha Wave Trader community. When I met with Jim, who's been a trader for 20 plus years, I asked him to see what he had been trading prior. I looked on his chart and I recognized he spent so much time with indicators. After counting 9 indicators, I gave up because I could not find or see price anywhere. Price was blocked completely and nowhere to be found. If you spend so much time with indicators, your focus remains on indicators, not on price, not on price patterns. And that is not very empowering. If you just spend time with price, you would understand very, very clearly Fibonacci levels found on any instrument and any time frame. All the levels in front of you are Alpha Wave Trader proprietary Fibonacci levels. Reversal zone is the most crucial area, not the place you want to enter into. This is Bank of America prior to earnings last year at the level 18. Very powerful reminder. Price comes to reversal zone. It doesn't matter what the earnings will be. This is the place to exit, not to enter the trade. Here's Amazon last year, day prior to earnings. I received a lot of thank you emails. This was posted on social media, very, very crucial reminder. Don't pay attention to earnings. This is a time to close your position. Price comes to reversal zone. The most powerful fundamentals will fail completely, as all the levels preset in price far in advance. Here's Euro, and here's very powerful reminder. Respect reversal zone and never enter into it. Every entry in 38 area did not work out, as Euro been stuck at this level for a year and a half and eventually collapsed completely. Pay attention to what happened when Euro struggled to the upside to break through the end of the minor trend. It had taken Euro more than 2 months to break through this level. Dance at decision point 2, second Fibonacci resistance level, complete collapse from reversal zone, and bullish rally from the end of the minor trend that's again became completely powerless. I posted this on social media before I left for vacation, projecting that price will come to 3400. What do you see had happened? Once price broke through the end of the minor trend, S&P went into Euro went into complete free fall. I will gladly take a look on Euro because free fall on Euro is not over with. For us Americans who love to travel, Euro is only halfway done. And I will gladly take a look at that later. So you'll be amazed how much you see when you just remove everything from your price. And this is all you see. I find the price to be the most magnificent puzzle of all. As one of the graduates of the course calls Alpha Wave Trader method the best chess game in town. Because price is exponential puzzle, just like chess game is exponential game. But it will test your knowledge always and forever. And if you just understand when price is giving you corrective moves, this is not the place you want to trade. This is massive correction. This is exactly the same sequence that S&P had done today when we walked away from computer, taking almost 3-hour break. And this is very powerful reminder and true story. Take a look on oil monthly. What has oil done on monthly is absolutely expected. All the levels identified by Alpha Wave Trader method since 2008. This is what I'm teaching in Fibonacci class this Friday. Oil came to the end of the minor trend in 2011 and staged quite a rally if you remember. Bullish rally from 80 to 110. Bullish rally again in 2012 from 80 to 110. What has happened on oil when oil broke through the end of the minor trend? The same exact free fall as Euro had done. What is oil doing right now? Is this the time to buy oil? No, it is not. Oil is stuck in worthless bullish correction. And here's a true story. A year ago, I received a phone call from local financial advisor who said to me, I don't know what to do with my client who is retired Exxon executive. He was invested completely, his entire portfolio into Exxon. Why in the world would you remain in stock, in any oil stock? If you know Fibonacci levels, you would be completely out. We had multiple short points of entry from 108. And if this level is broken 80, you are completely out. You would never remain invested in any oil stock. That's why knowledge of Fibonacci levels is essential, not just to your trading, to your investments. We're looking at yearly charts. We're looking at charts that have exponential hold potential for the next 20 years. But they have exact same formula as hourly. Risk management entirely different. But Fibonacci levels is what forms crucial support and resistance levels. As you remember, and as will be posted tomorrow morning on social media, where did we buy S&P from? End of minor trend. Where did oil stage powerful bullish rally on 2012? End of minor trend. Formula remains the same. Trader psychology entirely different. What you trade is up to you. Traders who learned Alpha Wave Trader method trade options, trade ETFs, trade stocks, day trade. Multiple traders do both. And they share it in their testimonies on the website. So if you ever come to Alpha Wave Trader Room, as a matter of fact, you will receive invitation to the trading room for next week, next Monday through Thursday. You will witness Alpha Wave Trader method in action on S&P E-mini. But exact same formula remains. If you decide to trade weekly or monthly stocks or Forex 4-hour chart, as our students sharing on website time and time again, showing you that formula remains the same. It doesn't matter if you trade stocks, options, Forex, oil, DEX, price pattern never ever ever changes. It is all the same formula. What you trade is up to you. Fibonacci is the most fascinating sequence that found in everything that surrounds us. And it confirms each and every day. And as you will see, what happened today at FOMC, that is absolutely powerful reminder. Everything preset in price far in advance. And everything has the same Fibonacci sequence, time and time again. So how is it calculated? This is the golden ratio I use in Alpha Wave Trader method. I only pay attention to these numbers. No other numbers matter to me. If it's not Fibonacci number, not interested whatsoever. And here is, in nutshell, Alpha Wave Trader method and rules I teach in the course. This is how I see the price, formed by 5 waves. Major trend 5 waves, minor trend 3. In Alpha Wave Trader method, you learn to buy the inception of the trend, wave 1, or the inception of wave 3. You never ever 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 trade counter trend, wave 2, counter trend, wave 4, and you never ever 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 acquire position into reversal zone at the end of wave 3. What happened today at FOMC release was very powerful reminder. Never ever 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 acquire position into reversal zone. It doesn't matter what you trade. This is bonds complete collapse and complete reversal as expected from reversal zone. If you invest in bonds, you had not been long bonds. You've been completely out. This is not the place to enter any position. And this is in a nutshell Alpha Wave Trader method. 5-wave structure and complete reversal of the major trend from reversal zone. Ranging markets occur 80% of the time, and it's especially important to respect the range the markets are in. If market is giving you 3-point range, you couldn't be catching 10-point rallies. What happened today after FOMC was completely expected, just like ranging markets for a couple of points prior. That is essential and crucial to respect. If you are trading markets, which very typical, especially on low liquidity markets such as DEX, oil, pound yen, Fibonacci levels still respected. You just have much bigger range. Alpha pattern is wave 3. Wave 3 is the most powerful wave in the markets, as it's always present. And this is also a very powerful reminder Never acquire a position at the end of wave 3. This is not the place to enter into. This is the place where you trail carefully and look to exit. You are not entering into reversal zone. Here's a picture perfect example to the downside. If you ever acquiring position at the end of wave 3, nothing good happens ever. Price comes to the end of wave 3, you simply respect and stay out of acquiring any trend position. You monitoring for reversal. Here's a couple of examples and I look forward answering your questions. As you see, the same exact formula, Euros 3-minute chart, as I've shown you on oil monthly. Here's another example. Oil, low liquidity instrument. If you are trading oil, you are an experienced trader who understands that low liquidity causes extreme volatility. Oil will give you very cumbersome structure, nevertheless, it still respects Fibonacci levels. This Google 1-minute chart is probably one of the cleanest charts ever. If you look on this structure and you're wondering what the heck does this mean, this is pure price at its best. It's clean and stellar price patterns. 3-wave structure and complete reversal from wave 3. Exact same thing as Aapl monthly. Exact same thing as bonds, as Aapl, as euro. This is 2 key concepts to alpha wave trader method. Pure price for entry and Fibonacci for exits. No software, no indicators of any kind. Gradients of the course trade on any platforms. Platforms I've never even heard of. From Sierra Charts to MT4 to Thinkorswim to Interactive Brokers to TradeStation. Any platform that has the price has alpha wave trader method. Every platform I've ever came across has Fibonacci tool. What you have to identify, what you like to trade, what time frame, what risk management is appropriate to you and your account size. In a summary, in alpha wave trader method, I use and I teach pure price for entry and Fibonacci for exits. Any instrument, any time frame, any platform. If you use these rules, you have high probability entries, high probability targets, and more than anything, you learn areas of inherent danger. This is where bonds monthly are currently. Complete reversal from reversal zone, and bonds stuck here 3rd month in a row. And I will gladly look on yearly charts so you could see that we are in an extremely interesting place on S&P. Twice a year I teach Fibonacci Trading Bootcamp. Every time I develop a new strategy, I teach Fibonacci Trading Bootcamp and the latest strategy I developed. Currently I developed 23 strategies. This is a strategy number 3. I named it Exhale. Honestly, I'm running out of names. It is absolutely our favorite time of the year. We have graduates of the course coming back from 3-4 years ago to take the bootcamp, where you polish your basic core skills and you receive 2 additional weeks of education, 2 additional weeks of drilling trading education during December 7th through 18th at absolutely no additional cost whatsoever to new students. The basic group education is only 8 weeks, with a bootcamp 10 weeks. Private mentoring 16 weeks, with a bootcamp 18. Sooner you start the course, more prepared for the bootcamp you are. If you come to the website and you click on About, you can learn about Alpha Wave Trader Method. You can read my story, and my favorite part, you can meet our students. I fly all over the world. Next week I'm in New York meeting with our students. This is me in New York last year, meeting with William and Serge. You can listen to their audio testimonies on the website. William is option, stock, and day trader. Serge trades S&P. Here's one of my favorite students, and it's a very interesting story. Incredible Carol. Carol is a phenomenal trader. She was trading oil prior to coming to the course. Right now she's mainly focusing on S&P as a day trader, and she also trades options. So I met our students in Australia, in Singapore. This is Singapore 3 years ago, with Daniel, who trades NASDAQ. And that's, in a nutshell, what Alpha Wave Trader Method all about. Price, Fibonacci, and you choose what to trade. At any time, if you would like to contact me, please call me on this number 925-257-4298 or email me info@alphawavetrader.com. So traders, I look forward to your questions. Please post the instrument and time frame of your choice. I will gladly take a look on major stocks, forex, futures, and indexes. This is euro right now in worthless bullish correction. Once euro will break 1, euro will collapse to 80. Once euro will break 80, euro will be in free fall all the way to 50. I don't know when this will happen. I'm not the master of time, but I can tell you this is worthless bullish correction. 90% chance this level will be broken very, very soon. Can it happen in the next few months and yes, next year? Yes, it can. This is monthly chart. This is for position trading. Short from 38 is not done. This is only worthless bullish correction. Key, monitor for the rules you learn in the course. This is worthless bullish fluff to be ignored completely. But this is not the place to short into. Remember what happened today on S&P hourly. This is not what's happening on euro. There is no spectacular reversal from the end of the minor trend, as we witnessed on S&P. When S&P flew 30 points, we've taken advantage of 10 of those. I do not trade Forex 5-minute chart, but as I mentioned to you, if you listen to audio testimonies on the website, we have a number of Forex traders who trade on MT4. I would never advise anyone to day trade Forex, especially 5-minute charts. It's extremely expensive adventure. If you're trading standard lot on euro, you are spending $20 to $30 round trip versus trading euro future where you're spending $3. If you're trading Forex, this is Randy. I worked with Randy last year. He's a doctor in Canada who trades Forex. He trades 1 hour and 4 hour charts. If you day trade Forex, you should not be trading standard lots. On such short time frame, it's extremely expensive. And it's very, very important to recognize the accounting and the expense involved in trading. Let me show you what to expect next on gold. Shall we take a look on gold? Here's gold monthly chart. Here's another true story. I met someone who bought a gold mine when gold was at 1800. Why in the world would you do that to yourself? Gold is in reversal zone. This is not the place or time to buy gold. This is a place to exit long position. This is not the place to enter the trade. What is a crucial level right now to the upside on gold? 1200 area. Is it time to buy gold when it comes to long-term investment? No. It is only bullish correction when it comes to monthly and yearly charts. The cost of the course is $32.77. Private mentoring $79.77. Savings of $777 for the boot camp. It doesn't cost new students anything. We have only 11 spaces left. Boot camp, 2 weeks, daily education, daily trading intense environment with new strategy. Sooner you start the course, more prepared you are. Decision points in reversal zones are Alpha Wave Trader proprietary Fibonacci levels. Most important support and resistance levels in the market. It doesn't matter if you're investor or you're a day trader. You learn the levels. You can use them always and forever. And this is S&P yearly chart using exact same rule as you see what has happened today on S&P hourly. The same exact formula. Hourly, collapse 16 points in a matter of seconds. And this is yearly chart. Not the place or time to enter the position. Place and time to enter the position was at 600 area in 2009. Yearly levels change. Yearly levels on Aapl had not changed since 2009. What you trade is up to you. But as investor or day trader, you will always and forever benefit from knowing these levels. And you would never ever acquire position into reversal zone. If you do, your success rate less than 20%. You entering into brick wall, which is not a wise thing to do. This bullish rally, 160 plus points later, been struggling at this level, 2072 for the last 5 days. S&P is heading to here. All spelled out by Alpha Wave Trader method since the month of August on daily chart. The chart you trade is up to you. Daily levels change few times per month. This is not a good time to buy S&P. Bullish rally overextended. Good time to buy S&P was at 1868. Last time to buy S&P was at 2000 area, 2007. This is not the place to enter the position. Way too late. Not a good idea. Only after you see powerful selling pressure and only using the rules. No rules, no trade taken. And here's multiple other examples for previous FOMC releases. Here's a reversal from the end of the minor trend on S&P FOMC trade, March 2015. How familiar is that? Bullish rally from the end of the minor trend today. So, ladies and gentlemen, in a nutshell, this is it. I'm always open for your questions. I love your questions. We have few more minutes left. Thank you, Hugh. When you're posting the instrument, I would greatly appreciate if you would post the time frame next to it. If you say the name of the instrument, but you're not posting time frame next to it, I don't know if you would like me to take a look on 1 hour chart or weekly chart. So the question is about Pcln, you mean, not Pcln. Here's the data feed. It's a major stock, correct? Thank you, Hugh. What time frame would you like me to take a look? Pcln price line. Let's take a look on Pcln. Just speaking of the devil, since I have yearly levels right here in front of me. You had such a beautiful trade on Pcln. Such a flawless, gorgeous trade. This is where Pcln is right now. Based on alpha wave trader method, you are buying so low. This is where Pcln last year had bearish correction. You see the selling pressure? Where Pcln collapsed to? Do you remember what I had shown on S&P monthly? S&P monthly had been stuck in massive bearish correction. Had not been able to break through decision point to the downside. This is very big red flag. S&P is absolutely exhausted. Not the place or time to buy S&P. Last chance you had to buy S&P was 1850 area. So let's take a look on Pcln daily. Let's see what it's showing to us.